Welcome, William. Good morning to you, sir. It's evening here in Australia. Good to see you on board. Let's wait for some more people to join in before we start this off. Some interesting price action going on lately, that's for sure. Here to explain what's going on, what I see in great detail, which is not a surprise at all. And we also need to take into account a couple of things as well. So for those that are just joining, this is an XLM live stream update as per the title, but I'm going to just go over the waves again, as I always do, and explain why the waves have given us some more clues here now. So this is really cool stuff. Perfect timing with the latest move. It's exactly what I wanted to see at this time in order to explain what we're seeing here at the small degree. So welcome, Yasin. Good to see you, sir. So the whole point of this is to answer a couple of questions that I've seen floating around from different people recently. Especially one that you asked earlier, or one comment that I saw, I believe it was you, talking about that 160 target. That idea has changed. It changed a few videos ago, a few live streams ago. But it's also changed for the members as well, because they have the full insight into that particular idea and how it's linking up with what's happening across the board. So very interesting times indeed. And it's all heading towards basically the final destination, which I'll try to cover a bit in this video, but let's just see more people come in. Welcome, David. Good to see you. Welcome, Adrian. Good morning to you. Welcome, Mohammed. How you doing? Good to see you also. So, yeah, just waiting for that number to increase for another minute or so before we get started. So as you can see, there is definitely a move going down at the moment. Anybody have any ideas? Can anybody have a guess at what we're seeing here? What this pattern is? Does anybody know? How you doing, Joshua? Good to see you. I'm doing very well, thank you. Welcome, Corda. Good to see you. So if anybody has any idea what this is right now, it'd be good to get some guesses on the board, so then I can tell you what I think it is, according to Aria wave. So this is timed perfectly for this particular move, because I want to ask people, I want to see who knows what out there, what do they think this is. So that's one of my motivations to create this live stream today, or tonight here in Australia, is to try and understand what other people are seeing. What do they feel? Ooh, Joshua. Joshua says E-wave. Anyone else have anything? It's actually interesting. Last wave C. Interesting. Why not incorporate chronological analysis your way, Mike? Not sure what you mean by that. I do basically update on the waves each time. When we don't see much movement, I just sit there talking. But from now on, there will be more updates around important times, more than just sitting there talking, because a lot of people want to have shorter updates. They much prefer to know a little bit more about what's happening, and then we're done. So we're going to try and not make this one go for too long, but we also want to cover all bases. All right, so we have enough to get started here. So let's switch to the chart. In a moment, once I get myself together. There we go. All right, so Joshua, he's a member, got a pretty spot on there with the E-wave. So this is actually very important. This is something I want to talk about. And the reason I want to talk about it is because we can use the waves to our advantage and understand what's going on. At the moment, you start to see something that is potentially not what you thought it was. Okay, so there was a couple of things that led me to this count, which Joshua has correctly identified with the E-wave. And this is an important point that I want to make, especially to the members. So basically, Aria's wave, when I did the initial discovery of the pattern, right, I did actually go through a lot of, there was some confusion initially when going live with the wave analysis, right? So when going live with the wave analysis, it's hard because there are a certain set of things that can happen, only a certain set of things that can happen. But it's easy to make a prejudgment, and also it's important to have a what if. What if this is not what I think it is, then we will expect this. So in my previous live stream, I did say we are seeing a CDE pattern, which turned out to be just a C wave. But because of what happened after, we were able to confirm that much better than if we just, try to guess our way through. So one thing I want to point out here is that C wave, right? Look at wave 5 of that C wave. Look how long that was and sharp compared to the rest of the move. That's supposed to be a 5-wave move there, right? So that in itself, it kind of does have alternation, but it just looks weird, right? It looks weird because wave 5 was the sharpest, and there was basically no divergence on the RSI. So RSI is not always a good measure of strength at the small degree, right? Because it's a very small degree, because you have a lot of volatility at the small degree. So therefore RSI doesn't always help, right? Another thing I wanted to point out was, just say, for example, like somebody who's looking at this chart right now, right, who maybe is an Elliottian, right? Maybe they're seeing, okay, look, we had a wave 1 because this is a 5-wave move in their mind, because they saw something 3-wave later, right? Now this, like when I try to do this analysis, live, I try to go back in time and remember how I used to think before discovering the pattern, right? So I always used to think of, in terms of Elliott wave, where you saw a 5-wave move and then followed by a 3-wave move, which never went, above the start of wave 1. In our imagination here, just pretend this is a wave 1. It's a wave C, but it's a way, the way Elliotticians look at things. You need to be mindful that there's a lot of participants in the market and they're looking at this thing through their own, lens, right? Their own perspective. And a lot of people use RSI, moving averages and Elliott wave, right? So if you saw a 5-wave move down and then you saw a 3-wave move up, because Elliotticians believe there's only ABC in a correction, it can get more complex than that, of course, in Elliott land, which is, to me, it's just not very good for people to use as a true analysis tool, because how can you have something that's so subjective, but then only claim that it's ABC, and then it could be something else, a triple double combination of a pattern or a flat pattern or all this sort of stuff, right? When really there's no such thing as any of that stuff, right? A flat pattern. I mean, come on. That there is nothing more arbitrary than saying something is a flat pattern. That's arbitrary judgment of a sideways pattern, right? And the only reason they probably call it a flat is because it didn't make a triangle shape. But the truth is that all corrections contain the same waves. It's just it's a matter of perspective and how to identify those particular waves at any given time, using a process of elimination, but also using the previous analysis of the entire pattern since the beginning of the chart data. Okay. So it's very hard for you to know what's happening in the moment without knowing the entire larger picture pattern first, right? Because you have nowhere to begin. Where do you begin your analysis, and why did you begin it there, and why? That's the most important question, is why. Why did you begin your analysis where you begun it? That means you know what's coming next. And that's what Aria wave does. It actually tells you what to expect, but it's not like you're going to pick it up overnight. It's going to take some thinking in your mind to actually understand the concepts which are laid out in very plain, simple to understand English, right? In the most basic way that I can possibly put it together, right? My background is in IT, so I understand the need to explain technology to people who are non-tech savvy people, right? So this is where I came from, and I understood that. So that's why I also mentor along the way. To those who contact me directly, they get my live opinion, live advice, but I also make them think, what if this, what if that, right? It's not all just about, oh, I learned, I read, I saw, because it's experience through thinking. Your thought process is important as to how you're going to identify these patterns moving forward, right? So that's key right there. That's key. So therefore, in this situation, you see a sharp move down after a 3-wave move up, after a 5-wave move. Any Elliottician now might be shorting this, or some, or I don't know. I really don't know what other people do. But if we're to take statistics into consideration and understand that 95% minimum traders are usually wrong, then it's not hard to see how you could misinterpret this wave for perhaps the start of a wave 3 down. But if you use Aria's wave, that's really not practical in the process. It's not a practical way to look at it because it doesn't make any sense, right? Welcome, Equali. Welcome. What's up? What's up, bro? Long time. Well, it's an opportune time. It's a time where we can actually look at something that's happening and try to make sense of it. So that's why we're here today, right now, in this live stream. So we're not going to make this too long. The live stream might go for an hour max, but to me, it's an opportunity to explain that, you know, at small degree, patterns can be very hard to identify. At larger degree, they're much easier to identify because you have more nuances, you have more evidence and suggestions using Aria Wave compared to at the smallest degree, you've got to use your best efforts. But because you've already determined the previous pattern, it's not about, oh, is C wave going to keep going down now? No, it's not about that. We already called the bottom here. Okay. So to me, that's a non-thought. There's no such thought going from my head right now. To me, it's all about understanding that the previous move down was a very strange looking C wave because we've had the confirmation that now we've had a D and this is an E, right? Go to the RSI. Whoa, that's oversold, completely oversold because we're in an uptrend. And when something gets oversold that quickly in an uptrend, it just means one thing. Most likely that's the last wave down in the correction, okay? So it's kind of like a sweet spot, you know, a sweet spot for particularly if you are a futures trader on a chart somewhere in, you know, on a chart somewhere. I'm not saying you should trade margin trade this at all. I'm not saying that. I'm not a financial advisor, but I'm just saying that E waves, if you know how to correctly identify them, they are a sweet spot for breakout trades with good short stops and, you know, understanding the bigger picture, the bigger pattern using the kind of analysis that we put into the portal, well, that I put into the portal these days, helps people have more confidence, even if they're still learning, because it's not easy to learn this stuff in a matter of days, weeks, sometimes even months. It takes months, I reckon, to really dial it in. Probably takes a year, maybe two. It takes a lot of mentoring as well, which is why it's called the Mentor Learn program. It's not a course. Some people think it's a course. It's not a course. It's a program, right? You know, like when you install a program on your computer, this is like installing a program in your mind, right? You're installing a program that detects and understands the patterns. So it's not a course. A course will try to teach you certain things. And don't get me wrong, there is a bit of theory in Aria Wave, but we don't want to overcomplicate things. A lot of my audience, a lot of my members are male predominantly. So visualization is important for males. So my program involves a lot of visual, you know, a lot of visual diagrams and explanations that assist with visualization of what this pattern is at the small degree, at the large degree, it all fits together to fractal patterns, right? That's what it's all about. So what do you see in BTC XLM chart? Yes, yes, yes. Nothing has changed on that chart. It's basically the same deal that we're seeing on this chart, except it's slightly different degree pattern, right? It's still the same kind of thing because it's based on the percentage gains that XLM will have compared to Bitcoin. Okay, so this is something else we've established over the last few videos or live streams, is that the XLM BTC chart is not necessarily a representation of the strength over BTC, because obviously XLM is pretty small compared to BTC, but it's more of a gauge of percentage gains compared to Bitcoin. And I think that's the most important takeaway here from that answering that question, is that that's what the XLM chart, that's what the BTC cross pairs try to explain to you, is that it's more of a how strong is this coin compared to BTC. And I think that's very important when you start analyzing BTC cross pairs. It's you're not looking for a contrarian idea, because that's really not how it works, because it's not to do with like euro compared to US dollar. You'd have to have more of a similar price in order to have that kind of contrarian inverse relationship between these pairs. But in terms of crypto, because we have such a big leader being Bitcoin, those are the smaller coins. It's mainly like a yardstick for the smaller coins in terms of percentage growth compared to Bitcoin, because they are at such a small value compared to Bitcoin. Okay, I'm not saying that's not going to change over time, but that's, in my opinion, that's what it means. Okay, so you got to be really careful when you're looking at that. It's just a clue, right? And there's many more clues you can use, including the US dollar, because that's what Bitcoin's priced against, and also other markets which are correlated in a sense, because everything is against the US dollar. Okay, so a lot of my members, well, all my members got an insight into the latest in-depth analysis across those particular ideas and insights on those particular charts recently, because they are the most important. Joshua asks, do you think we are in fact in first wave E or third wave down? It looks like wave 3 of E. First wave. Oh, okay. Well, as I mentioned to you already, if you look at the RSI, it's already oversold. Okay. And it went pretty deep into oversold territory. So if we break above that high right now during the course of this video, I would probably suggest that this is over already. Okay. So like, that's what I mean. Like E waves, like typically, especially during an expanded correction, E waves will tend to fall to the end, to the end of the first wave, which is here, right? Here. Okay. But that doesn't mean that it has to, right? And this is why we've got to be really careful in the future analysis when we are looking at what's coming soon, the big correction, is that we have to be careful to make sure that we're paying attention, because it's going to be a larger degree move, right? It's going to be like this C wave we just saw, but the E wave, I believe, is going to be a lot larger. So it's totally going to, in my opinion, be the biggest fake out in cryptos probably ever, right? Because the D wave has, if you know, on the program, it says quite clearly why the D wave is such a tricky wave. And that's what we're about to see in the bigger picture. And then what comes later absolutely basically wipes people out. So it's important to understand, what wave you're in. It goes back to what I was saying before. Where do you start your analysis from and why? because it has a lot to do with where you're getting in and where you're getting out. And that could entail multiple trades in one pattern if you are consistent with the waves, right? If you understand them, like that's you'll know what I'm talking about by that, because it's all on the portal. Basically, I'm just reiterating some of the theory stuff, but it's basically it's a guideline, especially when you have an expanded correction. You know, you have the type 1, the type 2, you have the regular. But at the end of the day, with something that's oversold on a small degree times small degree, like what you're seeing now is completely oversold on the 5-minute. Go to the 15-minute chart, right? It's looking like it's also gone pretty low. Now, if you look at how far it went up since where it basically is now, right? Have a look at how far it went up since that low on the RSI compared to how far it's dropped on the RSI and how far it's fallen down, right? It hasn't fallen much at all, but on the RSI, that's a bullish RSI, right? You'll notice that when it's a bullish, the RSI tends to only, it's like reloading the weapon, right? It reloads, you know, you put another clip in and it's just reload for more price action to the upside, right? Compared to when it's in a bear market, it does pretty much the opposite, right? The RSI will go overbought, but the thing hasn't even gone up much. And then it'll slingshot to the downside again. So these kinds of things are also important to look out for, as well as the pattern. So you can use RSI for that type of thing as well as wave 3 price action, but that's more, wave 3 price action is more on the larger time frames, right? The RSI on a smaller time frame is going to be used more to sort of gauge the weakness in the RSI, you know, because it's, you know, hardly moved down in price action, but the RSI is like, whoa, it's like, yes, we've just reloaded our weapon because we're going up, right? It's this interesting thing that I've noticed that's just very consistent, right? That's why sometimes you look at RSI and you'll go, well, how, you know, you do your back testing, right? And you'll see that the RSI, even though the market was going up, the RSI went down, and then it reloaded and it just kept going up. That's because it's an uptrend, right? So that's a clue to an uptrend, is the RSI going overbought pretty quick, but the price doesn't move much. So it's pretty cool stuff there. Because these indicators, they're pretty arbitrary in nature, but when you incorporate certain things with Aria wave, it just adds another layer of understanding, another degree. Like, I'll give you another example, right? So let's just say, oh, sorry, I'm just putting lines everywhere now. Still in drawing mode. All right, so let's just say, for example, you go to the 4-hour chart, right? Now let's just fix the scale on that. Okay, so now I think I've also mentioned this. This is pretty standard stuff, but it's more useful when you know RS wave. So you know how you get a break of the trend line, right? You get a break of a trend line, and the break of the trend line will usually tell you, oh, this is a break of the trend line, right? Now, I remember back in the day when I did back testing on trend lines, before, it was around the time I was still working on RS wave, but I just wanted to like test out some, you know, theories and stuff. I used to basically do the trend line analysis sometimes, just for the hell of it. Why not? You know, So you look for things like, especially when you see a completed 5 waves down, no matter how you interpret it, in this case, it's Aria's wave, right? It works better with Aria's wave, but in general, if you take a trend line from the top, absolute top, and then you go to like an E wave, in this case, you can see that price action played along that line from the E wave of the B wave of wave 5, because it's in type 1 weak wave C, right? So you can see quite clearly that there's price action that's using, there's a resistance there, right? And that's, to me, that's a valid trend line because it involves a wave E. Anything that involves a wave E at this angle, to me, is pretty good indication of a real break of a trend line. It's not just using a trend line for the sake of just using a trend line, because that's pretty easy to do, right? Anybody can draw a trend line on a chart using some points, but how do you know what waves that you're using? So once you know the waves that you're using, it actually gives you a clue as to why you saw something occur. And it also adds credence to your ideas, right? So apart from the fact that we need to break these levels that are moving up, of course, it's also understanding that we're in a D wave. We're in the first part of the D wave, which is wave A in brackets, right? And then also now we've had a break of that trend line, which was previously resistance. And you can see how much it was resistance even once we had bottomed. It was once again resistance in the B wave, right? So wave D is typically a breakout wave. And this is another example of that, which is why I also had the idea ahead of time that this was a D wave even before it started happening. That's why I gave an hour and a half notice for this particular live stream, because it was becoming pretty apparent that this thing was going to make a little move down, not a big one, but nonetheless, it was around the area of a break of some pretty big resistance. So once you start to get that kind of confirmation, as well as, all the rest of the stuff that we're doing here on this chart, it sort of just adds that little bit of, icing on the cake to give you that peace of mind that, that we are seeing something else happening here that is not just using waves, but it's using logic. I mean, you're using a break of a descending trend line, but you're using it with Aria's wave, not just because you decided that it was a cool place to draw a line, right? Because there are many cool places to draw lines, right? And this was an example of that. So that's why I decided to illustrate that on this particular chart right now. And also the end of wave 1, right? Because the end of wave 1, this usually indicates that it's a type 1 expansion. It's not a regular expansion, that's for sure. But that's only because we're using the waves as a clue, right? As I have explained previously. So right now, we've got this area where potentially it could be a turning point, because it's got multiple areas of support, right? So not only do we have a break of that trend line, which D wave is well known for being a breakout wave, you have a pullback to retest not only the end of wave 1, but a retest of that trend line, which is around here somewhere, potentially. Okay. So that gives you kind of like a target, somewhere to focus your attention. If you're into doing that sort of thing, so I think it's pretty cool to do that. So to me, that's the kind of ease in my mind that I have using this sort of methodology. But the thing is, it's just because of years of practice and years of research and years of, doing everything that I possibly can to get this out there, because it's not out there. This is not out there at all. So far, we've seen everything that indicates this is a bottom, and I did call that bottom there. It did break down below that channel, and it broke back up in a pretty good way. Yes, I did get it wrong initially, but that's because we had a different count. That was this wave here. I got that wrong, all right? And it was pretty obvious why that was wrong. I was pretty weak. It wasn't impulsive like these moves are. And I did explain that in a live stream that preceded that idea. But, it still had everybody excited. I got what I wanted. But at the same time, we're trying to make you understand that the waves move a particular way. So if it's not one thing, it's another, right? So there's always the what ifs. That's what I try to teach. That's what part of the mentoring is about. It's the what ifs. If this is not this, then it must be that, because it can't be this if this happened, right? So because this happened, it must be that. So you go back to the analysis, and you have to have a good memory, of course, and you have to have the portal open on one screen and the chart on the other. 2 screens, always a good idea. But as you know, my offer ends to the end of June for $499 USD worth of XLM for lifetime access. Now, I have to really iterate this next point, is that it's going to go up to 1,000 again, $999 USD, but it's going to be yearly charged from June 30. Okay, so it has been a special of specials to me. I've just decided that I wanted to help people learn it before the top, before we get this move that's coming in the future. So the other thing I wanted to address was the $160 target is no longer a thing, because the latest analysis, which I have posted to the members already on the weekend, explains that we are actually seeing something even better than that, but you need to be prepared in order to take advantage of it. It's not gonna go there in a straight line. In fact, it'll probably go far beyond that. But the funny thing is that fractal patterns are funny because they repeat at all degrees of trend. So if you can understand what I'm saying, you might catch on to what I'm saying, but knowledge is the power here. So, I just really like teaching people. So I basically got my crew now. It's been a pretty good journey. But for those who still want to get in, I'm just telling you now, there's only 2 days left for lifetime membership for $499 USD. And then it's going to be $999 USD yearly, if you want to be part of this crew forever. You better get in now. So going back to that, E. coli. So wave C is finished and wave D coming up. We're already in wave D. This is wave D. This is part of wave D. Yes, correct. Wave C ended down here, remember? Remember I did that live stream where I said we're expecting the bounce? That was down here, right? Yeah, that's absolutely true. But in saying that it's absolutely true, which, is a pretty far out comment, you're crazy, you think you know everything. The thing that's going to really give us that confirmation is, like I said to you, a break above this magenta line up here. That's going to be a really good sign that that is true. Okay, because like I said, we need confirmation, because I have to protect myself as well, right? my knowledge is not your knowledge. Until you learn it yourself, which I encourage you to do, instead of relying on other people, you should learn the waves yourself. I'm not a financial advisor, remember? I just offer you my findings, my methodology. I give videos where I outline what I think is happening, which so far has been fairly accurate, but I always give you the what ifs. But I don't always say, hey, buy now, buy now, buy now. I already did that back then. I already did that, right? Now, we're not looking for buy in. You can be buying in this whole time since I said that. But I'm not going to keep saying that, right? That's what I did. And that's maybe what I'm still doing, right? But that doesn't mean that you should go and do everything I say, right? Because your level of confidence may not be like mine, right? So, you know, you can't just dump a bunch of money onto something based on something someone said online, just because, you know, you feel comfortable with that. I mean, even though that might be okay, you know, if you use the right analysis and you're in tune with the right people, etc. How do you feel? How comfortable do you feel when you go to sleep at night? Do you feel that, okay, I'm happy with this person, or am I happy with my own analysis? Those are two very separate, different things right there, right? And you have to, it's a codependent relationship here, right? We all know what those are like. Well, some of us do. We need to really start to try and build our own knowledge, because it's going to get heavy soon. It's going to get really heavy soon in the coming months, right? So if you don't have your own understanding, at least bare minimum understanding of the waves, you may find it difficult in the next few months, even leading up to the end of the year. I don't have a crystal ball. Timing is not my thing. Understanding the waves is my thing, because timing, you can have this drawn out pattern and then it makes a move, right? And then the pattern still forms exactly the way you thought, but it's the same thing at a larger degree. It's the same thing at a larger degree. Welcome, Flashback. Back in a flash again. Good to see you, sir. Hey, no, that's fine. Look, I like to reiterate these things. Like, let's go to the daily chart for a second and reiterate where we are. You know, it's not always to understand, not always easy to understand the deal here. So now, the one thing that I have loved to show off here is my question mark, because I'm not revealing that. And as you'll notice, there is no label at the top here of the first wave, which could be the first wave of any of the patterns in Aria's wave. So basically, what I'm trying to say is, without going into too much detail, is that we are expecting a D wave, okay? Where's that D wave going? Where is that D wave going? We need to figure that out. We don't know yet. We really don't know that. I'm not trying to make that up. But there is something else going on long term that is way more important than that stuff. Trust me on that one. I'm telling you, there is something way more important going on there. Okay. So forget about your $160 or $55 targets. That's crap. That's change compared to what's coming. Okay. But that's the story for another day. At this point in time, I just wanted to give you perspective. We've seen our A, we've seen our B, we've seen our C, now we're in D. Okay, that's all I want to say. That's all I'm going to say. So let's get back to this because we have to wrap this up in probably around 15 minutes. So just trying to give you that perspective on what's going on here. Definitely had a lot of information on this one in this video, in this live stream. A lot of stuff that is mainly centered around RS wave, because that's basically the whole point of this. But let me just adjust this top here, because I bet you when I move that up, it also moved the top of it higher, and that's not what we want. Oh, it's slightly off. But that can make a big difference down the bottom. Oh no, that's slightly off again. That's what happens when you're a perfectionist. Every degree bothers you. Because when you go to a higher degree, it actually changes it a little. It's actually quite funny. But yeah, you can see quite clearly that that's the spot right there. That's the spot right there. That D wave is so important in this analysis. This is like, you can actually trade based on break of trend lines, but you just got to know where to put the trend line, right? You could also lose a lot of money on break of trend lines, but when you got the waves down, break of a trend line is actually, it's actually pretty cool. It's actually pretty cool. So yeah, so like I said to you before, the sweet spot is around 24 cents, 24.5 cents, roughly. We're already in oversold, but we're probably going to hit the oversold on the 15-minute chart. On the 5-minute chart, we're already oversold, so we're probably just going to see divergence happen there, which is fine. On the 1-hour chart, we're having a bit of a pullback right now, but that's fine for the 1-hour chart because, like I said, these things can reload pretty quick, even if it doesn't drop that far. And so far, we can see what's happening here. So on the 4-hour chart, though, this thing's probably just going to retest that center point for RSI. It's already broken above. Funny that it broke above the RSI in D wave, also midpoint on the RSI, D wave on the RSI. That's actually quite funny. And on the daily chart, we are literally like, we've got a nice move ahead. We've got a lot of room to move here. Okay, we were completely overbought at the bottom, at the low that I called the exact low, right? If I just take away the drawing, that was exact low according to RS wave. I did specify that at the time. Big hammer. Not much of a confirming candle, but we did see the spinning top, not quite a doji, but like a spinning top candle with a confirming candle. So to me, that's kind of like still in the realm of bullish reversal pattern. You have like a mix of things going on there, and you had your confirming candle on that particular move. That's a sort of like a bullish, like a harami pattern. The harami pattern, if you know what that is on the candles, that's the pregnant lady. Yeah, she's giving birth to a new trend. And you can see on the RSI that it's basically like, it's almost like an inverted head and shoulders pattern. These patterns actually do happen on the RSI. And actually another indicator that I haven't used for a long time, which is really cool on the daily chart. I don't recommend you use indicators at the beginning, definitely all about the waves, but I just like to point out certain things when I can. The special K, right, is pretty interesting at times as well. This one can be used on a daily, but it can also be used even on 4-hour charts. So even on 1 hour charts. Okay. So if you use it, if you're using it on the 1 hour chart, it's probably the best at this for this C wave. You can see that there's actually a divergence on this particular pattern here. So we've got the full C wave in view, and you can see that there's clear divergence on this is a rate of change. It's a special. If you ever looked up Martin Pring, he has the special K indicator, which is absolutely pretty fascinating when you learn about the history of it. You can see quite clearly there that there's divergence. That last low was actually weaker in terms of rate of change. Obviously, I mean, obviously look at that compared to the wave 3. So you can quite easily see that that was divergence there. So this is just another piece of evidence. I really, really like the Pring as a, you know, it's like icing on the cake, right? You should never use indicators alone. They're really not good alone. They're always good as a extra layer of confirmation, just like trend lines, just like everything else. But the waves are the most critical component of any analysis, right? Those indicators just give you that extra little bit of something, you know what I mean? And then there's that other one that I already mentioned last time, which for some reason they're missing on my chart right now. And that's the moving average, right? So we've got, I need to configure this. So let me just do that quickly. So you've got the 500 period, right? So typically the 500 period, yeah, it's usually typically a lighter color. I like to use a lighter color for that, a bit thicker. And then there's the 1000 period moving average, which is, you know, a bit darker, maybe red or something for 1000 period, and also a bit thicker as well. Right, and you can see that on the 500 period moving average was actually support on that one on the daily. So it literally just touched it. It was like, yep, nah, I don't want to go below that. We're done here. So that's a crossover right there. So, but the thing with this is a really long-term moving average. So it's more useful than those 100, 200 ones. They're very short-term in the, you know, especially with these corrective patterns. It's better to use a longer term when the correction is drawn out the way this one is. Longer term moving averages are way better than those shorter term ones. So good morning, Pete. Welcome to the live stream. You're a bit late. We're basically almost done here. You can rewatch this live stream. Just go to the channel. But yeah, we've discussed quite a bit tonight. Tonight in Australia, that is. Not for you, clearly. But yeah, just there's all these things you can use, but they're only useful at the right time, right? They're not always useful, but they're useful at the right time to add that extra layer of confirmation, right? So just before we wrap it up, let's look at the Bitcoin chart. Now, this is a 5-wave move, weak wave C as well. To me, this is the same deal, except I have a feeling that we already saw that D&E pattern happen already here. All right, I think potentially D&E happen here, right? So that's the confirmation there rather than where we put it last time. Now, I could be wrong, but to me, it just seems that way simply because of that move right there. It's let's have a closer look at that move for a sec. See that? It's a 5-wave move. So I reckon that what happened here on Bitcoin was, being the leader of the pack, I reckon the D happened there and the E happened there. I don't know. We have to wait and see on that one. But to me, that it's not really that hard to believe. Yeah, I don't know. I just had that feeling earlier on. So I suppose we just have to wait and see on that one. But the C ended down here as per my previous XLM revision there. But I suppose on this particular chart, you'd probably best off using, I'll just get rid of this. And you know what? It's actually not easy to draw trend lines on Bitcoin because it's such a crazy market. So for this particular trend line, you'd be using an extension. Sorry, you'd be using an extension. So technically, we haven't really broken any trend line in Bitcoin, but yeah, I suppose it'll be interesting to see what happens next. So that's what I'm seeing here. So if there's any questions, now's the time to ask. Are we already seeing a reversal in this pattern? Well, it's too early to tell, obviously, but let's just chuck an RSI on there just for the hell of it. It's really oversold. On the 1 minute chart, it appears as though we already saw wave 3 in the middle here. So we could be just seeing the end of this right now. But like I said to you, these things on a small degree, it's just not, who cares? You know, who cares about that? You know, we don't need to use that, right? If this goes up from here, all that means is that it wasn't a type 1. Okay. But pretty much almost a type 1. But I wouldn't be surprised if it just goes that little bit lower potentially. But so what? Who cares? That's small fry. We've already done the bulk of the analysis. We know what the pattern is. We're just looking to see how long this E wave is. Is that really important right now? Nah, not really. It's just, you know, it's just for those members out there who just want as much info as possible, even though they can just message me if they want to. But I just want to say once again before I finish up, is that the 499 XLM for 499 USD worth of XLM for the Aria Wave Mentor Learn program ends on the 30th of June, which is only 2 days away. After that, that's it. It's 999 USD worth of XLM per year, right? Because I'm going to be ramping up a lot of stuff moving forward. So there's going to be a lot of work done on the portal. There's a lot of way more insights coming because I'm going to be dedicating myself to that. Thankfully, I've built the community to the point where I can start expanding it. So to me, it's just about getting some more people on now, later, it doesn't matter. But this stuff will basically prove itself over time anyway. And by the time that happens, which is good timing now, we should see a move up exactly when the promotion ends. So I like people who have used their intelligence to understand what's going on here. Definitely those people get lifetime access. So you're in forever. For the others, they're just going to be yearly, paying yearly, and hopefully you can learn it quick or just keep extending it out as long as you need. But I reward the early adopters. I'm very thankful for those people. They really helped get it off the ground, and it's just going to get bigger and bigger from here because it's an ongoing process. And I hope you have all enjoyed this update. Stay tuned and keep an eye on that E wave. We need to see a break of the last high to confirm wave 2 has completed. And once we see a break of that high, we're going to move impulsively to the upside in wave 3. And you know, wave 3s, they can be pretty strong waves. So keep an eye out for that one. That should be pretty cool. Hopefully I'll catch you guys on the next one pretty soon. And have a good evening, good afternoon, and good night, and even a good morning. I'll see you next time. Take care.